All right, now back to today's big story. That's BP's official announcement of a new CEO, its $17.2 billion second quarter loss, and its plans for the future. Joining us to discuss all this is Alex Morris. He's an analyst at Raymond James, which lowered its rating on BP stock soon after the Gulf oil spill to market perform, where it still stands. Also with us is Mark Kiesel, Pimco's global head of corporate bond management. His investment-grade corporate bond fund ranks in the top 2% of its peers over the past 5 years. He is bullish on BP bonds. Alex, listen, let me start with you. I was talking with Andy Lipow today, who's an oil consultant, energy consultant here in Houston. He said, you know, the recent sale of assets to Apache values BP's oil at about $19 per barrel. By that measure, the company has about $300 billion in oil if it decides to sell off its company in piecemeal. Why don't you like the stock if it's worth so much more, if its assets are worth so much more than its $70 billion market cap?
Well, right now we're just still kind of staying conservative with the stock. There's still a lot of headline risk coming up before they actually kill the well with the first relief well. So we just think right now with all the pressure coming out of Washington, the headline risk, we're just staying on the sidelines for the time being.
Mark,
what do you...
Oh, I'm sorry, Matt.
Please, Carol.
Well, you know, I want to bring Mark into this discussion because he's not sitting on the sidelines when it comes to BP bonds. You guys have been out there buying.
Yes, we have been buying fairly aggressively over the last month, particularly about a month ago when the bonds were yielding 8 to 9%. I think we see it from the perspective of asset quality. This is a company with significant financial flexibility. It's got assets at $250 billion. If you look at the debt plus all the liabilities, even under a worst-case scenario, this is a company that can cover their liabilities between 4 and 5 times through assets alone. It throws off $10 to $12 billion of free cash flow organically at $60 to $70 oil. And the fact that this well is now no longer spilling oil in the Gulf, I think that's a big positive.
What about, Mark, what about the headline risks that Alex mentioned? And does it matter, for example, if BP can foot part of the bill here to Anadarko and Mitsui, maybe even Transocean? Does it matter if they're found grossly negligent?
Well, it definitely matters. The costs will go up. The costs could go up to the higher end of the range. You know, we've modeled anything between 25 to 40 billion ex punitive damages. They could go up to that high end of the range. At the end of the day, though, this is a company that can absorb those costs. Those costs will be paid out over an extended period, and the organic cash flow alone of this company is significant. Obviously, the company is shrinking, so it's not quite as good of an equity story. But from a bond side, having 4 to 5 times coverage on assets is very significant.
Hey, Alex, is there a breaking point in your model when you look at BP regarding potential future liabilities that you say, I really don't want to touch this company, or it becomes, I don't know, it becomes a bankrupt story or it becomes a takeover story?
You know, we don't think so. As far as bankrupt goes, kind of like Mark was saying, they've got the assets and they've got, you know, a significant amount of cash flow that we're not real worried about them as a going concern. As a takeover concern, you know, I don't know why any of these other big oil companies would want to touch a company like BP with the legal uncertainties that are going on right now, as well as the you know, antitrust concerns, especially downstream.
What do you think about, for example, when we see the Joint Commission put its report on the president's desk in November? If they don't say that BP was grossly negligent, is that enough to make you say this is one where you go in and buy with both hands at these levels?
You know, people have been saying that for a while. Actually, I've been hearing a lot of that. We're not really sure exactly where the line is that, you know, we can jump in with both feet and say, you know, it's time to go. But, you know, first things first, they got to plug the relief well, get that going, and then we'll kind of go from there.
Mark, let me ask you, because we've been following a story, too, about BP saying that the SEC is investigating matters related to that Gulf of Mexico oil spill. Specifically, we're saying BP is subject to a number of legal proceedings and investigations related to the incident. The company is saying this in a statement today that includes the SEC and other investigations by U.S. state and federal agencies. How worried do we have to be about this?
Well, I mean, you should be concerned. Obviously, these investigations are going to be ongoing for the next several years. I think at the end of the day, it's a company that is organically free cash flow positive at current oil prices, even at $60 oil. I don't think they're going to reinstate the dividend anytime soon. I think that would be a political no-no. So I think if, from the bondholder perspective, I think you've got more than sufficient asset coverage and flexibility.
Does it concern you, Mark? I mean, BP has so many assets here in the U.S. that they haven't yet got permits to drill on land. They haven't got permits to drill on and out in the Gulf. Does it concern you if the federal government all of a sudden really starts to turn up the pressure on BP and doesn't let them do anything, doesn't let them get any of the oil out of the ground?
Well, I think that's one of the reasons why Dudley took over as CEO, given that he has been responsible over the last month for the Gulf of Mexico. I think those assets are going to be valuable to someone. So if BP is no longer allowed to drill new wells in the Gulf of Mexico, that doesn't mean that oil production shuts down in the Gulf of Mexico. Those assets are going to be valuable to some player like Exxon or Chevron. But ultimately, I think the reason why BP set up this $20 billion trust is to play nice with the government. I think they're doing the right thing. They've repaired the PR damage that has been done, and the new CEO, I think, will help. So over time, I think this political risk will dissipate, and I think BP should get access to these assets to drill over time, but it will be an uphill battle.
Hey, Mark, we had a columnist who wrote a story that basically said BP should kind of ignore the United States, do their own thing, don't worry about putting an American CEO, and that they should just worry about exploring the rest of the world where they don't have these constraints. I mean, do you agree, or do they really need to be here in terms of the U.S. interests?
No, I think they do need to be here. It's basically a third of their asset base and production profile. It's a company that produces basically 3.5 to 3.6 million barrels of oil equivalent a day. So they're one of the largest E&P companies. I think the U.S. is critical to their asset base, and I think that's why the new CEO, Dudley, is in charge.
Hey, Alex, let me ask you what people here in Houston think about Bob Dudley. I mean, he's been here for a while. Obviously, he's worked in the oil industry for over 30 years. Is he the right man?
Well, people think he's a cool-headed troubleshooter. That's obviously kind of traits that we're looking for over the next, few months and next couple of years. So, yeah, I think people are going to give him a shot.
All right. Hey, Alex, thanks so much for joining us. Alex Morris of Raymond James and Mark Kiesel as well of Pimco. We appreciate your time. Carol?